Why are gold and Bitcoin rising together? Let us start from beginning. What is gold? Gold is a valuable physical metal. People use it for jewelry, technology, and investment. Governments and central banks also keep gold as part of their financial reserves. What is Bitcoin? Bitcoin is a digital asset. It exists online and is not created by government or central bank. A public digital system called the blockchain records Bitcoin transactions. People don't need to buy one complete Bitcoin. They can buy a very small part of one Bitcoin. Now, what is a government bond? The US government sometimes spends more money than it receives from taxes. It therefore needs to borrow money. It borrows money by selling bonds. A bond is a loan to the government. Investors lend money to the government. The government promises to return that money later and also pay interest. All the money the government still owes is called government debt. Recently, investors became worried about America's large debt, inflation, and the strength of the US dollar. The US Treasury is the government department that manages America's money and debt. It announced that it would increase purchases of some older long-term government bonds from $2 billion to at least $4 billion in each operation. This is called a bond buyback. The Treasury buys older bonds from investors to help the bond market operate more smoothly. This does not mean the US government is directly buying gold or Bitcoin. It also does not automatically mean that America is printing money. However, some investors saw the decision as a sign that the US bond market was under pressure. The US dollar then became weaker. Why this is important? Imagine that you have $100. Today, your $100 can buy 10 products. But after inflation, it may only buy 8 products. You still have $100, but your money has less purchasing power. Some investors therefore look for assets that governments cannot easily create in unlimited amounts. Gold is naturally limited, and producing more gold is slow and expensive. Bitcoin is also limited. A maximum of 21 million Bitcoin can ever exist. This is why some investors move money from dollars and bonds into gold and Bitcoin. When more people want to buy something, its price normally rises. For example, imagine 10 people want to buy one gold coin. They may offer higher prices to get it. But if many people want to sell and only a few people want to buy, the price normally falls. Gold and Bitcoin prices are therefore controlled by supply and demand. How much is available, how many people want to buy, and how many people want to sell. Several things can change their prices. Fear about inflation or government debt can increase demand for gold and Bitcoin. A weaker US dollar can also support their prices because both are commonly priced in dollars. War or financial crisis often helps gold because investors see it as a safe place for money. Bitcoin can also benefit from more investment, positive government rules, and large companies buying it. However, Bitcoin can fall quickly after negative regulations, hacking, scams, or market panic. Gold and Bitcoin don't always move together. Gold has been trusted for thousands of years and normally moves more slowly. Bitcoin is much newer. Its price can rise or fall significantly in only one day. How can people buy or sell them? People can buy physical gold bars or coins from a reputable gold dealer. They can later sell the gold back to a dealer. They must consider the dealer's fee, storage, and insurance. People can also buy a gold ETF through a stockbroker. A gold ETF is an investment traded on the stock market that follows the price of gold. It is easier to trade, but it is not the same as keeping physical gold at home. Bitcoin is normally bought through a cryptocurrency platform or exchange. A person creates an account, deposits money, and buys Bitcoin or a small part of one. Bitcoin can be kept on the platform or transferred to a digital wallet. A wallet protects the private information needed to access the Bitcoin. To sell it, the owner places a sell order on the platform and changes the Bitcoin back into dollars. People must check fees, security, tax, and whether the provider is trustworthy. Crypto scams are common, and money lost to a scam can be very difficult to recover. This market movement is sometimes called the debasement trade. In simple words, it means people are trying to protect their purchasing power because they are worried that normal money may lose value. But rising prices don't mean gold or Bitcoin will continue rising. Gold can fall and Bitcoin carries much greater risk. Understanding why they are rising is not the same as saying everyone should buy them.